Well, hi everyone, and welcome to the Infinity Futures Daily Trading video. My name is Raleigh White, and I'm here to talk to you about the trades we took in our live trading room on Thursday, November 6th, 2014. We're looking at today's economic calendar. You can see there were several things on tap that we needed to be aware of, most of which occurred prior to the open of the U.S. trading session. At 7:30, we had unemployment claims data coming out, and it was lower, with 278,000 new jobless claims being filed versus an estimate of 285,000. Then at 7:30, we also had preliminary non-farm productivity data coming out, which was a bit higher at 2% versus an estimate of 0.9 of a point. And then preliminary unit labor costs came out lower at 0.3 of a point versus a forecast of a full percentage point increase. Then at 9:30, we had natural gas storage data coming out, and it was higher with 91 billion cubic feet in storage versus an estimate of 96 billion cubic feet. As far as today's pre-market sentiment was concerned, things were fairly mixed coming into the open. Now, the Asian markets had closed mixed ahead of the European Central Bank meeting, and investors were cautious and waiting for clues from Mario Draghi on what new Eurozone stimulus plans he might have in mind. We did see that the best performing market was Shanghai. It closed up 0.3 of a point on gains in the financial sector, and the Korean Kospi was also up 0.3 of a point on upbeat corporate earnings, in particularly with Hyundai Steel. Now, the worst performing markets were the Japanese Nikkei. It closed down 0.9 of a point on profit taking after reaching 7-year highs yesterday and on the strengthening yen. We also saw that Australia closed down 0.2 of a point on a dip in the banking sector. Now, the European markets were open but trending lower as rates remained unchanged. So the Bank of England and the European Central Bank have decided to keep their benchmark lending rates unchanged, and that was fairly much expected. And people were really just waiting to see what Draghi was going to say and what fresh ideas he might have for stimulating the Eurozone economies. Sentiment was, however, being weighed by disappointing earnings that came out from Societe Generale and AstraZeneca. As far as the United States is concerned, Wall Street figured to open up higher after the European Central Bank made a commitment for increased stimulus. Now, the futures were pointing up as the European Central Bank committed to a quantitative easing style of stimulus program, as well as on the lower U.S. jobless claims. We do see that the energy sector remains under pressure after OPEC has decided to lower its oil price forecast, and this is just adding additional instability to the energy sector. Focus for many U.S. investors would be on today's natural gas storage data. FOMC member Powell has a speech at noon, and on tomorrow's critical employment data. As far as our trading activity is concerned, we attempted 7 entries in the markets, but unfortunately we didn't get any fills, but I still want to share with you what I was looking at. But before I do that, I do need to remind everyone of this following important disclaimer, and that is that trading futures involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources, as you may lose all or more of your initial investment. And always remember that past performance is not necessarily indicative of future results. Well, turning to the charts, let's begin here with the E-mini Dow market, and you can see we had 3 attempts in this market. Shortly after the market opened up, we had 2 bars moving lower, followed by 1 bar retracing, and I was hoping the second bar was going to retrace and give me a 2-bar pullback with a short entry at 174.64, just below the upper Bollinger Band, but the market came only within 4 or 5 ticks of my fill and moved away from me, and I had to take this trade out. Staying with the E-mini Dow market, you can see we had 2 bars moving higher, followed by 1 bar retracing, and I was hoping this second bar was going to come down and give me a 2-bar pullback entry long at 174.30 off the lower Bollinger Band, but you can see this bar never came down and came close to giving me a fill. Staying with the E-mini Dow, we can see that prices broke through the previous day's high and started to push lower into the main pivot point. We had 1, 2, 3, 4 bars moving lower, followed by 2 bars retracing, and I was looking for a short entry here at 174.21, just below the previous day's high. In this case, this bar opened up, moved within 3 or 4 ticks of giving me my fill before moving through what would have been my profit target, and when that happened, I had to take this trade out of the market. I also saw some opportunities in the E-mini S&P 500 market. And looking at this market, we can see that about midway here in the trading session, we had 1, 2 bars moving higher, followed by 1 bar retracing, and I was hoping this second bar was going to retrace and give me a long entry at 2016.5, but the market moved away from me and I had to take that trade off. I also saw an opportunity in the 30-year bond market. We can see here shortly after the open of the U.S. trading session, we had 2 bars closing higher, followed by 1 bar retracing, and I was hoping this second bar was going to retrace and give me a long entry just off the previous day's low at 140.25, but it never came close to me and I had to take that off. My attention then turned to the crude oil market, and in the crude oil market during the trading session I saw a couple of opportunities. We can see here that shortly after the open of the open, we had the U.S. markets. We had 1 bar, 2 bars moving lower, so exactly 2 bars in one direction, followed by 1 bar retracing. And I felt certain this second bar was going to continue to push higher and bounce off the upper Bollinger Band, but it didn't, so I had to take my entry out, which was a short entry at 77.68. Now, staying with crude oil towards the end of the trading session here, you can see we had 2 bars moving lower, followed by 1 bar retracing, had the second bar retracing, and at this point in time, I had a short entry here at 77.78, and we got in here just towards the end of the trading session, and at this point in time I did not want to trade during the lunch period, and so I pulled this trade out, and you can see that had I been a little bit more patient and stayed with it, I would have gotten my fill in a winning trade. But once we got outside the trading zone right here, I just elected to take this trade out of the market. So during the trading session here, just to recap, I had 7 attempts and no fills, but I did want to keep a look at the markets and come back and take a look and see if there might be some opportunities, in particularly in the crude oil market. And if I shift over there to the crude oil market, you can see here that we had a big column of X's going up here, which established, if you will, an area of minor resistance here at 78 even. So $78 a barrel, nice psychological level. So we can see the prices came up, they retraced. This area was tested, it held. We moved sideways, it was tested the second time, and it held. And when it started to move up with some real momentum coming in here again, I felt that prices were going to hit this level and break through that level. So I decided to enter long at 78 with a 10-tick profit and a 10-tick stop loss. Well, this market came up almost like a rocket. It accelerated into and through my entry point, so I got filled at 78. It moved quickly 5 ticks in my direction, so I moved my stop loss to break even, and I trailed my stop loss by 5 ticks all the way up into my profit target. So the nice thing here is I was able to pick up 10 ticks on this trade, which was worth $100 per contract traded, and that's where I closed the day. So all said and done, 8 attempts in the market, 1 fill, this one in crude oil, which is worth $100, and I look forward to seeing what kind of opportunities might present themselves tomorrow. Well, looking at tomorrow's economic calendar, you can see there are several things on tap, many of which do occur prior to the open of the U.S. trading session. We begin with all-day ECOFIN meetings out of Brussels. These are the meetings of the European financial ministers, and they meet once a month. Then at 7:30, we have, since the first Friday of the new month, we have the release of the official government employment data, which begins with the non-farm employment change data. So this is where we're going to see any change in the number of people being employed. We'll also at 7:30 have the publication of the unemployment rate as well as average hourly earnings. Then at 9:15 we have Fed Chair Yellen will be speaking from Paris, where she's attending an international symposium. At 1 o'clock in the afternoon we have the release of consumer credit data, and at 1:30 we have FOMC member Tarullo speaking from Chicago. So hopefully we're going to see some nice movement and some volatility in the markets when the employment data comes out, and I hope that that carries over into the open of the U.S. trading session. And with that, I'd like to thank everybody for watching today's daily video. I wish you a pleasant evening. I look forward to speaking to you tomorrow. Take care and good night.